Bitcoin has officially shed nearly $40,000 since the beginning of October, one of the sharpest multi-month pullbacks of this entire cycle. And it's left the market rattled. We've seen almost no meaningful bounces on the way down, just a steady bleed that's shaken out a lot of confidence. And then yesterday, Nvidia steps in after beating earnings yesterday. Nvidia supposedly saves the market, at least that's what the headline made it feel like. But what does that actually mean for crypto? And more importantly, what key levels do we need to watch as we head into the weekend here? I'm going to be breaking down the most important areas on the chart and what would signal a reversal here versus just further downside. My name is Paul Sampson. Welcome back to DataDash. Hey folks, I want to share something that's genuinely useful for anyone that's navigating this market right now. We talk a lot about staying positioned without overexposing yourself, and one tool that really fits that mindset is a crypto-backed loan. Sometimes you need access to capital and maybe short-term expenses that come up. Maybe you want liquidity to take advantage of an opportunity without unwinding your long-term holdings. And that's where crypto-backed loans tend to make a lot of sense. You're not triggering a taxable event, you're not stepping out of your long-term thesis, you're simply just using existing assets as collateral. But here's the bigger piece and why I'm bringing it up now. After everything that we've seen in the past with platforms that have mismanaged user collateral, safety is the #1 filter that you should apply. And if a lender rehypothecates, or meaning reinvests your assets, they're introducing risk that you did not sign up for. So I wanted to share CoinRabbit with you today because their model is built around eliminating that exact risk. They've been operating since 2020 and their entire structure is straightforward. They do not reuse or reinvest any of your collateral, and everything stays in secure cold storage under their control. Again, no rehypothecation, no lending of your assets, none of that. And what I like is how simple they've kept the workflow. You can actually borrow against 320 plus assets. Approvals are extremely fast and usually takes only really about 10 minutes. There are no forced monthly payments and you decide how and when you'd like to repay. The interest is calculated monthly and the rate starts at about 1.4%, but again, you're in control of the timing. They also run constant monitoring on every active loan, so if your collateral value ever approaches one of their risk thresholds, you get notified immediately via SMS or an email. And that kind of transparency and responsiveness is what people expected from the early lending platforms, but only a few actually deliver on it. And just to give you a sense of how easy it is, when you go to the homepage, you choose which function up here in the top left that you would like to apply for. You then choose from, again, the over 320 plus assets that they offer here. This will show the loan amount that you desire. You can then choose your LTV down here and then choose from either a long-term or short-term loan. Then just go ahead and click on the get loan option at the bottom. The entire process usually takes about less than 15 minutes from start to finish. And for anyone here in the DataDash community, they're giving an exclusive offer through our link, which is going to be a 0.5% off on your first loan. So if you want liquidity without leaving your long-term positions, be sure to check out CoinRabbit today. I'll be sure to leave a link down in our description area below where you can take advantage of that exclusive offer that they're only offering here at the DataDash community. All right, folks, the few main key points, at least here locally on Bitcoin, in my opinion, are these 4 levels noted here, right? So pretty simple. As long as we're living below this yearly open, which again is really going to be extremely relevant for the remainder of this year, the next few weeks here. I will say that it would probably hold some relevance as we go into the next year as well, but it is definitely a key area. You have seen how the support and resistance has been since we've created it this year, right? So we opened up the year over here. We have had support, lose it, back test it here, flips it over here again, support, launch pad from there, and we are now back below it, effectively erasing all the gains of the 2025 year. Or if you want to just look at it in the sense of just being range bound for the entirety of the year as well. That yearly open was also our secondary target of this AB equals CD setup that had a completion zone around the end of September, which is exactly where we did here, right? So the #1 target of this was down towards the 382, that 107, where we got that immediate wick down to the a little bit lower there. But you can see how we held this for a few days here, got a little bounce back up, lost it here, then back tested that area right there, and then we continued lower to our secondary target, which is the gold pocket. There was also the yearly open is there as an additional piece of support, and you can see here that we've essentially lost this as well, and we've actually back tested it also. So just like this region up here, and as long as we're living below it, you have to anticipate more downside. But here's the key. we could very well flip this area again, and that's where things start to make a move back to the upside. Okay, so very, very crucial level here, this 93, let's just call it 93.5, okay, just to get cover the bases across most exchanges there. So very, very key region here. As far as any more downside would go, again, this is the key level to get back above. As long as we're below it, we could float very much down to 86,000. There's a couple things there. Between that and 82.5 is kind of my next major areas that I'm looking for. And then if we're going to see the aggressive target met of this entire setup, which, by the way, this is a sequence of Fibonacci's that not only was very, very clean and perfect in a sense, almost textbook. Again, the way that I was able to target this time frame up here, and when we were targeting that is when we were trading around this region down here. Once we put in the C point, is because this was a perfect fib time as well. So this is a very, very valid, clean setup that we can also see how well respected the targets have been so far. And if we're going to see the most aggressive target of this, it is a full retrace to the tariff low. Okay. So just taking news and emotion aside, this just is what it is. As long as we're trading below this region here, you have to be open to the idea that we could very well come down to this, and there's no news needed here. All right, so that is a very technical setup. However, just because we're down living below this region right now doesn't mean it's a nail in the coffin. We can very easily come back up, reclaim some ground here, and see a little push to the upside. So this is the this is the higher time frame setup at hand. We've already fully met two of the major targets. So to me, this is something that is completely spent in a sense, right? So this is not something I would easily or just blindly be like, all right, well, this setup is in play, I have to short into this region, or I have to anticipate that this is going to happen, or Bitcoin has to come down. That's not the case. Okay, very rarely do we actually pull back to those areas there. So this is something that it is the next place, and as long as we're down below that, again, just kind of setting the stage here. But for now, we've come down, we've printed a high time frame bearish setup. Both of the more conservative targets have been met. Now we're going to see if we get any strength that come into the market here, and then what can we look at from there. Well, we've got two key levels that for the remainder of this week for one, and for the remainder of this month for two, should remain just kind of in your mind. All right, so the 112 one you see above us is obviously a good ways away. This is the average of last month, likely to be met this month. It's not a guarantee, it's not a 100% hit rate, but it is very, very high likeliness. Okay, so just something to keep in mind, because we can a lot of times and again, it'll be paired with some crazy tweet out of nowhere. If that's something that you kind of try to pair up with, is like what's going to push us there and all this. Statistically, we see a lot of moves back to these averages, and they usually happen pretty fast. All right, so again, I'm not saying it has to happen. There's only 10 days left in this month for this to hit this month, but it will still remain. Even if we don't hit it in November, this is going to remain a key level to be aware of for the next several months. Okay, in the same sense, the average of last week, likely to be met this week, is up here at 98,000. All right, that's something to be aware of. If we start to flip 93, very well could see a quick move back towards that average again, another mean reversion type of play, very similar to like when you see price action push back to the averages of price, such as the 200-day, the 50-day, what have you. This is the same situation. It's the average, a high time frame average at that. For most of them, price tends to revert to those mean averages, right? So that's one thing behind that. Again, nothing truly materializes until we get back above that 93.3, right? So that's the key level, the line in the sand for any type of upside. Flip that, get back into this region here where we've probably got a nice little jaunt. And again, this is a weekly statistical hit rate here. So you're talking on something that we could go into the weekend and push through to that. So we could see one of those Sunday pumps that lead us right into that, and it's still a valid setup here. After that, again, we have 10 days left in November. Little less likely at this point, just because of how hard we've dropped and how far away we are from this, that we come up to this now. But just something to, again, keep in your mind. Not really relevant here either till we start to reclaim some ground here. So that's kind of the base case for where we are with Bitcoin, right? We're in a little bit of limbo. We've definitely been losing supports, but you can't get overly bearish after a sizable drop like this. This has actually been in line with the other two drops that we've seen over the last year and a half here, right? So the last sizable pullback, which again was only about 34% from high to low, In 2024, our inauguration down at tariff lows was 32. And then currently we sit at about 20 or right at about 30. Okay. So right in line with our traditional so far for the last, like I said, the entirety of this bull run, basically, right in line with the Bitcoin pullbacks that we are accustomed to. A little bit faster, all right? So I will say that that's definitely the case between all three of these. We had a really big range version of this. This was about 6 months here. This was about, January to... This is about 3 months here, and then this one was a month and a half. So literally 6 months, half of that, and then half of that. So definitely getting faster in the case, and I know that that brings up a lot of fear, a lot of emotions in that sense. Another thing to truly be aware of here is that the fear in the market is at extremes, right? And again, there's no news even wrapped around this. It's just sheer price action. So when we looked at that original setup in the beginning of the video, the AB equals CD, where we've come into some key support, the key targets of that pullback, where yes, it can get deeper. There's always the chance. There's always the risk. This market is heavily propped up right now and definitely due for a correction, not just the crypto market, all markets, right? So we have to be aware of the surroundings in that sense. But currently here, really nothing's quite broken yet, right? We've definitely, again, lost some support, all that good stuff. To me, so far, this is just a true correction. And even if that was the all-time high that we're going to see for the next few years, what have you, still think that rises will occur. And we could still see places where Bitcoin pushes back up 15-20% from here, not make a new all-time high, and that could actually pull up the rest of the market fairly nicely as well. So I did just want to touch on this yet again, right? So extreme fear here, as we are trading at $90,000. These are the days we were joking about back in the past, where you would say, oh, there will be a day when Bitcoin crashes to $90,000, right? And this is when we traded at $20,000, $40,000, $30,000, $10,000, $8,000 Bitcoin, when everybody yearned for that $100,000 day. But now it's again, it doesn't matter if Bitcoin goes to 1 million. People will panic when it crashes to 900,000. So like, it's just always going to be the emotions of the market. But currently in today's climate, we are in extreme fear here. We are at a 30% retracement, similar to the others that we've seen in the past couple months here. Not going to go lower, of course. Again, that 82.5 is something I have my eyes on too. Not ignoring that by any means, and that puts us still pretty much in line with these other pullbacks here. Not that we have to have the same exact pullback, of course, but I point that out because in these two times, minus the fact that this was where everybody's been able to, this is at the end of the 4-year cycle time frame. So this is really adding a lot of uncertainty and fear for good measure. I'm not saying that that's something that nobody should be thinking and whatever, because so far that's all we've had to go off of. But if you recall living out these two drops as well, this was March of 2024, right? So, and then all throughout all this, you had I can't remember what the majority of the negative news was, but I know the carry trade got heavy as far as fear went right here at the lows. And then we got that nice push up. Of course, this was the tariff for like each of these, it was market's dead, it's over, it's all these things. And me, I don't know. I just approach the market as a market, and even if we do crash 50%, 60%, whatever the case is, I mean, that's just the market at this point. Like, it's not any different from what we've already experienced. I think it's kind of crazy when people get a little over wrapped up in the sense of like, oh my God, the altcoins are just going to collapse from here if Bitcoin crashes. Like, the altcoins have collapsed several times over the last even just 16 months. Even in the same period of time I'm pointing out right now, during this pullback, I remember it pretty vividly, just like this little drop right here before the overall drop. This is when altcoins dumped, same thing, liquidity event, whatever you want to call it, 70 to 90%. In this drop right here, this first one that occurred in February, remember that, right? This year, altcoins dropped 70 to 90% then as well, right? This little drop right here before we even got the correction again, altcoins dropped 70. Actually, many of them went to zero, briefly, of course. Right, just over a couple moments. I don't know. We've already experienced 90% drawdowns here. Of course, it could get worse, but I don't know. To me, you have to realize what we're investing and risking here, right? This is a speculative market at best, and it's going to be volatile, right? So the 30% pullback that you see here in Bitcoin, which to me is relatively natural. Of course, it's painful in the process of it. it's hard to get in front of it sometimes, right? My biggest thing is just to be aware of it half the time, even just so that you can just put the emotions aside. Again, I'm pointing out that huge setup, the AB equals CD. How many times did you hear me even on this channel discuss how the end of September was likely to be, or the $130,000 area, yes, it front ran that, but was likely to be the next sizable correction in Bitcoin. Said it for months on end. Again, you know, if you don't catch the exact high or if we didn't play it right, whatever the case is, but just to be mentally aware of it so that when the time comes, at least you're not scattering and just kind of, you know, chasing down the what ifs, like what is going on. But when you're living it out either way, it's always going to be scary. It's hard, right? It's tough. Now, the S&P 500, again, we've highlighted how we have had basically a 40, almost 50% push to the upside here. Small pullback in the same breath that we see Bitcoin seeing 30% pullbacks or more, and we're in extreme fear. The stock market is also in extreme fear. And granted, I understand that this market is much bigger, but we've only pulled back 4.5%, really taking us back to where we were trading at just a few weeks back, which is also still very much so 36% up from our lows, and also just from our 2024 high still puts us 10% above what our last year high was, right? So yeah, it's the same idea here. We could push up to $10,000 S&P 500. Everybody panics when you get a few percent back. It's just the constant emotions of the market. But we could truly pull all the way back down to the 2024 high, and that would still be a very just notable natural correction before any type of continuation here, right? So not saying it has to get there, but that is something to just kind of be aware of here as well. It's about 7% more, about 11 to 10, right? So that's our normal pullbacks that we tend to see out of the S&P. And again, this is something that has pretty much just gone straight up. So just something to be aware of here. And we still have the overall target area to the upside there to also focus on. And then I did want to touch on Nvidia because we pushed into this major area up here again a few weeks back. 210's been holding it down like a boss. I've highlighted the 135 zone just because this is stacked with high time frame averages, volume targets, everything all at the exact same dollar amount, which sits at 135. We've also had a pretty straight move to the upside here. Okay, we've hit into some major resistance, and even yesterday's grand earnings. This is the daily time frame, mind you. We got a little boost here, don't get me wrong, but we really didn't do anything sizable. So not saying to heavily short Nvidia here or anything of that nature. I'm just saying be aware that a pullback to this region is very likely, just based on statistics. All right, so again, these are high time frame averages, high volume regions that prices likely return to during the following sessions. And sessions in this case are second half of this year. All right, so we've got a few weeks left. And without any news attached to that, if we were to just get a quick wick down even, again, these mean reversion plays sometimes happen pretty aggressively. At the same time, this does not have to happen. I guess is like the best way to phrase this is like if I'm looking for a place to like a new area to buy, or if I'm looking for a take profit area, this was definitely it, right? This was at least an area where you want to take a little bit of risk off the table, right? Keep X amount in case we continue to rise because Nvidia is just a monster. But at the same time, if we were to get that pullback down, this is about 30% pullback, right? So that's a pretty decent retracement there. You have some dry powder to be able to DCA, right? So that's the name of the game. It's the constant game of, scaling out, scaling in, scaling out and scaling in, all right? Or vice versa of that. If you're not trying to constantly be maneuvering your portfolio, just be aware. We could very easily come down to 135. Nothing's broken, very natural. And this is more than likely going to be our gold pocket area now. And would you look at that? Exactly at the gold pocket. So again, this is the 618 to 65 retracement area where we see a move up of this nature. A lot of times you pull back to that golden ratio and then you get the continuation up. No guarantee, folks. I'm just pointing out that it's a very reasonable area to consider. If I was to say, hey, if I wanted to buy some brand new Nvidia, where was I going to look for it? 135 is my level. All right. So if we don't get it, then we don't get it and it heads higher. That's great. But we've come in, we've hit resistance. We have been really consolidating around this region here. Could still kind of hold this for quite a while and then come down later. So that's how I'm viewing that. And again, nothing crazy well, let's just see. We got a couple percentage move, 3.5% move out of Nvidia yesterday from the earnings report. So that's not bad for an asset of this size. But But yeah, just wanted to kind of point that out there as well. All right, folks, that's going to wrap up today's breakdown. Look, these kinds of pullbacks in the market are never comfortable, but they're part of every major cycle. And what matters the most right now is just to remain level-headed. Focus on the key areas that are actually going to matter and not letting fear push you into emotional decisions, right? We've been through plenty of volatility before, and this is literally no different. Before we head out, a quick shout out to our channel partner, CoinRabbit. If you're looking for a way to access liquidity without selling your crypto during moments like this, their platform makes that process absolutely simple, fast, and secure. I'll be sure to leave a link down below if you want to check it out. Take care of yourselves, folks. Stay calm. I'll see you all in the next video. Until then, everybody, cheers.